If you're one of the 19 million taxpayers who have not filed your taxes and have asked for an extension, you probably already know you have until October 17th to file. But if you haven't filed yet, there's good news. You may be eligible for some little-known tax credit that could potentially save you thousands of dollars. Every year, millions of taxpayers overlook money-saving deductions and credits that can help them with the cost of raising a family, daycare, paying for college, saving for retirement, or making a donation to charity. Today, I'm going to share 7 of the latest tax credits in 2022 and show how you can qualify. I'm also going to show you how to file for free, so the information that you learned today not only won't cost you a dime, but can potentially save you thousands. And don't worry, you're not alone. In fact, a record 19 million taxpayers have asked the Internal Revenue Service for a bit extra time to file their 2021 individual income tax filings this past spring. As the Monday, October 17th deadline on those 6 months extensions are approaching, a lot of tax preparers and even tax professionals are still scrambling. So you may be asking, what's the difference between a tax credit and a tax deduction? So we're going to start with a quick refresher. Tax credits directly reduce the amount of taxes you owe, giving you a dollar-for-dollar reduction of your tax liability. So for example, a tax credit valued at $1,000 lowers your tax bill by the corresponding $1,000. Tax deductions, on the other hand, reduces how much of your income is subject to taxes. In other words, deductions lower your income tax bracket by the percentage of your highest federal income tax bracket. So for example, let's compare a $10,000 tax credit to a $10,000 tax deduction. Okay, so ask yourself, would you rather have a $10,000 tax deduction or a $10,000 tax credit? So assuming your AGI or adjusted gross income is $100,000 in both cases, on the left we'll see that the tax deduction of $10,000 makes your taxable income $90,000. Let's assume a tax rate of 25%. So basically you're now calculated at $22,500. So your tax bill is going to be that $22,500, and that's with the $10,000 tax deduction. Now, on the other hand, so on the right, same AGI, you have a taxable income of $100,000 and tax rate assuming 25%. So your calculated tax is $25,000. However, the tax credit applies to that $25,000. So now your tax bill is $15,000 versus the $22,500. So today I'm going to focus on the tax credits, so be sure to follow this channel and subscribe to get the latest on more smart money moves. Now before you file your taxes, I'm going to share with you 7 of the latest tax credits out there and show you how you can actually take advantage of them. Tax credit number 1, Earned Income Tax Credit. So qualified low to moderate income workers and families may get a tax break from this particular credit here. While there are several requirements, the most important are you have to have worked and earned an income of $57,414 and also have investment income below $10,000 in the year 2021. Tax credit number 2, the child tax credit. So families can claim this credit even if they've claimed advanced monthly payments during the last half of 2021. So let's break this down. So in general, you have to have a qualifying child who did not turn 18 before January 1st, 2022. The child needs to be a family member or dependent. So, a stepchild or a nephew will qualify as well. The child does not provide more than 1/2 of his or her support during 2021. And the child lives with the taxpayer for more than 1/2 of tax year 2021. Tax credit number 3, Child and Dependent Care Credit. So families who pay expenses for the care of a qualifying individual so they can work, look for work, they get a tax credit for up to $4,000, and you get 1 for each qualifying person and $8,000 for 2 or more qualifying persons. So let's look really quickly at what the qualifications are. So a qualifying person is generally a dependent under the age of 13, a spouse or dependent of any age who is incapable of self-care and lives with you for more than half of the year. So I've actually included a nifty little interactive tax assistant wizard in the notes below so you can check to see if you qualify. Tax credit number 4, Recovery Rebate Credit, or RRC. So those who missed out on last year's third round of stimulus payments can possibly claim the RRC, and you may be eligible. So we're going to break this down. So this credit can help people whose stimulus payments were less than the full amount, including those who welcomed a child in 2021. Now, you probably already know the IRS has already issued the first, the second, and the third stimulus payments. So most eligible people have already received the stimulus payment, so they will not be eligible for the recovery rebate credit. However, if you are missing a stimulus payment or you got less than the full amount, you may be eligible to claim the recovery rebate credit on your 2021 return. Tax credits, number 5 and number 6. The American Opportunity Tax Credit and the Lifetime Learning Credit. So tax credits for higher education can help offset a taxpayer's tuition and other costs by reducing the amount of tax owed on the return. So let's break this down a little bit. So the American Opportunity Tax Credit is a credit for qualified education expenses paid for an eligible student for the first 4 years of higher education. So you can get a maximum annual credit of $2,500 per eligible student. And if the credit brings the amount of the tax you owe to zero, you can actually have 40% of any remaining amount of the credit, up to $1,000, refunded to you. Now, the Lifetime Learning Credit is for qualified tuition and related expenses paid for eligible students enrolled in an eligible educational institution. So this credit can help pay for undergraduate, graduate, and professional degree courses, including courses to acquire or improve job skills. So there is no limit on the number of years you can claim the credit, and it's worth up to $2,000 per tax return. So just kind of breaking it down here in this little chart, as you can see, the main difference is just the maximum benefit for each of these credits. $2,500 versus $2,000, and also pay attention to the limit on the MAGI, or that's the modified adjusted gross income. As you'll see, one is $180,000 versus $138,000, and then if you're single, it's $90,000 versus $69,000. And keep in mind, you can't take more than one education benefit for the same student and the same expenses. So in other words, you can't take the AOTC and the LLC for the same student in the same tax year. And to make this super easy, I've included another handy dandy wizard that you can check to see which education credits you may be eligible for. And to uncover more opportunities, be sure to check out my recent video on how to claim your student aid debt relief under the new Biden plan. Tax credit number 7, retirement savings contribution credit, also called the Savers Credit. So you may be able to take a tax credit for making eligible contributions to your IRA or your employer-sponsored retirement plan. So I included a little chart here, but basically the more you make, the less you get. So as you can see here at the very top, the credit rate is 50% of your contribution, and that's if your AGI is not more than $41,000. If you're filing jointly, head of household, not more than $30,750, and if you're single, then the AGI is not more than $2,500. But as you can see at the very bottom, if you have a higher income, so let's just say, for example, if you're married filing jointly, if it's more than $68,000, then it's only 0% of your contribution. So I know that was a lot. So let's break this down with a little example. Let's just use Susan, for example. And Susan works at a retail store, is married, and earns $41,000 in 2021. Now, Susan's spouse was unemployed in 2021 and didn't have any earnings. Susan contributed $2,000 to her IRA for 2021, and after deducting her IRA contribution, the adjusted gross income shown on her joint return is $39,000. So Susan may claim a 50% credit of $1,000 for her $2,000 IRA contribution on her 2021 tax return. Okay, so those are 7 of the best tax credits for 2022, but if you have any more, feel free to drop a comment below and I'll be sure to reply to that. Okay, so here's how to file your federal tax return for free using the Federal Free File Tax Program. Oh, say that 3 times fast. The IRS Free File Program is a public-private partnership between the IRS and many tax preparation and filing software industry companies who provide their online tax preparation and filing for free. So there are currently 8 IRS free file online providers for you to explore. I'll drop in a link below just so you'll have it. Okay, that's it. You're back in control and now ready to roll. And finally, to see how to get up to $20,000 of student aid debt relief from Biden's new plan, be sure to check out this next video.